But speaking of development, and Daniel mentioned already, reading my thoughts, strategy. I know that rather recently you published a very ambitious 2030 strategy. Could you share for us and the audience what are the main pillars and the priorities for the next 5 years for the group?
Yeah, it's the size. So we have realized that size matters. If you're a listed business, of course, liquidity of the stock, daily liquidity of the stock matters. If you want to broaden your investor base and by that reach and access to capital once you need it, once you issue your bonds, right? If you at any point in time issue capital instruments, you need as broad reach as possible. And liquidity is one of the predominant determinators whether there's going to be interest or not, right? So in this respect, we are working on size. Our belief is that 50 billion euro is a minimum critical mass you need to reach as soon as possible as a standalone business, right? As a listed standalone business in the extremely draconianly regulated European space. It's simply otherwise very difficult to afford the entire setup you need to have, right, to be able to address all of these expectations from various banking union triangle expectations and the other aspirations. So size matters. That's why we said, let's apply a real ambition, which means we doubled the balance sheet in these 5 years, right, 6 years. And by that reach this 50 billion. Right? So it's pretty simple. We assess 50 billion is critical mass. Let's reach critical mass, right? And then we operate and communicate the entire strategy with 3 numbers, 50 to 1. 50 means size, balance sheet. 2 means revenue. 1 means profits, a billion, right? It doesn't ring a lot of bells in international big terms, but in Slovenia, this would be, of course, a lot, right? So we have been now with 500 million, the most profitable Slovenian company in terms of absolute profits, right? 1 billion would be even doubling this, right? So it would be material. And in the region in Southeastern Europe, you would maybe find three businesses of this level of profitability, right? In absolute terms. So it's size. But then, of course, it is how you get to the profitability element of it, because return on assets and return on equity you create from economics, not from the size, right? So you have to apply your capital in a meaningful way in order to, be able to make 50 to 1 is a very simple equation, 2% or, return on assets. How do you reach 2% return on assets in a declining rate environment, right? So you have to be smart in how you position your balance sheet, right? More consumer lending, more fixed rates, more leasing, less very lowly priced corporate business and so on, right? So you have to start managing, fee business, ancillary space. I mean, we corporate bankers are used to this, ex ante, ex post calculations, and we try to persuade credit committee. We will make sure 30% of payments are there, and then we shake, are they going to be there or not? We know this very well, right? But how to secure profitability is going to be the challenge, because of course we operate with the assumption that 2% lending rate of ECB really is going to be the lending rate, not that there is going to be 150 bips or 100 bips or something even more, right? Even worse for our economics. And then from this growth and positioning of balance sheet, we believe we can get there, right? It is based on significant efficiency improvements, which means that our aspiration, and we have clearly publicly communicated it, so it's no secret, I can tell it publicly, we want to originate more than 80% of all new standardized business, mass business, through mobile app, self-serviced. So already now you can, in Slovenia, in other markets to follow, get a cash loan up to 40K, right? Out of 40,000 euro, the credit card limits, overdrafts, and basic deposit products, insurance, and so on, right? Self-serviced. You don't need to talk to anyone in the bank. It's 24/7. You sign digital by a biometric signature. Email contract is emailed to you, and that's it, right? And then you, of course, want to apply the digital sales capacity that you teach people that they can, of course, self-servicely, in self-service format, actually do 90% of their banking needs, right? And then you want to keep in the branches only advisory stuff, in a sense that, you might not even manage cash anymore in the branches at all. I mean, it's a common discussion, right, by all the banks. And you might just have selected branches that still offer cash, higher amounts. The rest is ATMs. You anyhow work on transitioning from cash, right, to electronic ways of payments and so on. And then if you are able to do that, imagine you do 80% of retail business end-to-end, mobile first, digitally. We support that with 24/7 video chat with closing capacity, which means our contact center clerks can close on spot any transaction. They're just housing loan with mortgage as collateral, right? That you can't close on spot. Of course, time to yes is possible, but you can't close transaction, right? You can't provide money. Cash loan up to 40,000 is provided at 2:00 at night, flawlessly, seamlessly through mobile app. If you struggle, through the contact center. If you don't qualify it in terms of creditworthiness, then you are directed to the branch still, right? But this means that you would then, of course, shrink your more or less fleet, right? Which is anyhow a challenge. We all know how big problem a talent shortage is. So to get now people to work in branches is already a challenge, right? Let alone in other stuff. So it's going to be efficiencies, it's going to be size. I hope it was clear.
Totally clear. Just from your point of view, you're operating in countries where we also operate a lot of Western European subsidiaries, also, I don't know, OTP now, strongly there. What's the competitive edge where you say that's the USP, NLB, this is why somebody banks with you?
First is a set homework, which means, mobile first client experience is really polished. When it comes to corporates and when it comes to sentiment, how you're perceived, it is also you being a home play. So we are a home play. When I come to Skopje to talk to the governor, she speaks to me in Macedonian language. I understand her. When I come to Belgrade, I speak Serbian accent. When I go to Zagreb, I speak Croatian accent. So it's different. When for example, we didn't yet buy Komercijalna, but we were sponsoring because we had aspirations to buy something. We sponsored, for example, the Manager Association event where they award the Manager of the Year in Serbia. And I went up to the stage, and then I saw a big whole in anticipation. What is now this guy going to tell us? NLB, who cares about NLB, 2% market share? And I said, I'm absolutely sure you're all asking yourself what I will now tell you. But the Slovenian in Serbia. And I said, look, if nothing else, guys, we watched the same movies, we read the same comics, and we cheered for the same flag. They had tears in their eyes. And that's the difference. No international CEO, if not from the region, can do that. Simply can't. We were once the same country. We were cheering for the same team.
Raiffeisen Bank International. Make it happen.